It's technology. You're supposed to be able to trust it. That's why I always think, can you put all your nested eggs in a hardware wallet, cold wallet? The governments are not all bad. They're there as the backstop. If you lose your deposit in the FDIC is meant to come in and rescue you. If it's not over $500,000 or whatever. So, anyways.
Yeah, I mean that's a real problem. There are people that lose their life savings in Bitcoin, even though they're experienced, even though they've had Bitcoin for 10 years, they still could lose their life savings in Bitcoin if something goes wrong. There was a guy who downloaded an app from the App Store that looked very legitimate. It said it was like the Trezor app or the Ledger app, and it was in the App Store. It was approved by Apple, and there's 1,000 things that can go wrong, right? I mean, I did some research on, what if your wallet generates the same seed phrase as someone else's wallet? Can that happen? Is it possible? It can actually happen. It's actually totally possible. It's a very, very, very small chance. It's a ridiculously small chance, but it can still happen.
Yeah.
So that's a really good point.
And what are the chances that other guy has more Bitcoins than you or I do, Brian? Chances are, by the sheer laws of probability, if that ever happened, the other guy's a shrimp. Whereas, you're like a Bitcoin shark at least. So they'll open that wallet one day and go, "Woohoo! I'm rich."
I wonder if that's a hacker strategy, actually, to try to just generate as many Bitcoin wallet addresses as you can and just see if there's some in there that someone had before. I mean, it sounds crazy, but you never know. So how much do we?
In the days of AI, you don't even need to, you can just run algorithms all day and it can generate like thousands per second or whatever the number is. So if they can trick, major crypto influencers into losing their NFTs and cryptos in their wallets, they can trick 99% of the people listening to this. That's my view.
Yeah, I mean, on the other hand, can't they take your gold too? I mean, it's just pick your poison, right? It's pick your poison.
Hang on. They can, but and they did. That's what I've been warning about. In 1932, Roosevelt, the great American president, Theodore Roosevelt, actually assigned into law to ban or prohibit all private ownership of gold, because gold was going to be the backstop to United States currency. So gold was banned until the 70s, in theory, in private ownership. In practice, they couldn't enforce it. But that's why. Here's the thing. That's why it's all about diversification. Have a little bit in gold. Have a little bit in have a little bit in Bitcoin. Each has its own advantages and disadvantages. That's why I disagree with folks who say gold is dead and all in Bitcoin. And have a little bit in property and put it in different countries on both sides of the Cold War. On both sides of the Cold War, so that just in case one side wins or gets nuked, you can always run to the other side and still have a house there or two. And that the world is becoming more and more volatile. We're hitting that 100-year cycle. So I think it makes sense to diversify. I mean, some people would play a lot more aggressively than I do, and I understand why they do that. They would basically be like, I'm going to be all in Bitcoin or all in Tesla's options or whatever, and try to do the whole buy Lambo on Monday, thing. It's not for me. It's not for you, because we got families, so we've got properties. We don't need to do that, but some people would. I get that. Yeah.
But I mean, don't you think it's bullish for Bitcoin, Pablo, that you and I have had private chats about real world use cases? I mean, we both said, man, we really should own some Bitcoin in case this happens to Australia, United States, Europe. Like, that actually kind of makes me bullish on accumulating, and not just for an investment, not just when Lambo, but also because I really want to protect myself from all of the risks that are happening right now with currency and world superpowers. And I mean, it definitely has a legitimate use case that's been proven by gold that the rest of crypto doesn't have yet. I mean, yes, Ethereum is awesome. Smart contracts are so cool, but show me the real use case. I posted something a few days ago where I said, raise your hand if some crypto, not Bitcoin, some other crypto has changed your life on a daily basis? And I don't mean like it's made you rich because you invested in it. I mean like the use case of it. Like where has it, actually made your life better? And I didn't get any responses, right? Like Bitcoin clearly does do that and can do that. But that's why I was saying earlier that there's a divergence right now between Bitcoin and crypto. Like 6 months ago, it was the same thing. Bitcoin and crypto, nobody really cared about the difference. It was just like Solana, AVAX, whatever. But now it's very clear that like crypto is not Bitcoin. Like Bitcoin is digital gold. It's a store of value. It's going to survive this downturn. It is truly decentralized. I would debate that all day long. And people say it's not decentralized. You're right about crypto. Crypto is not decentralized. Bitcoin is decentralized with the exception of, certain mining operations concentrated in certain countries, but it can easily move. If mining gets banned in a major world superpower country, a third world country that needs the revenue is just going to say, okay, fine, well, we'll mine Bitcoin and it'll be a great industry for us. And they can mine Bitcoin. It doesn't take a lot. It doesn't take nuclear weapons. It doesn't take highly developed infrastructure. You can easily mine Bitcoin. So in that regard, I do think it's true decentralized digital gold.
Oh, by the way, Bryan, during that time you were off, I had to make a very specific point to folks here in Spaces to wrap up, but I'll do a proper chat here. So, and this is something I think you'd be very interested in as well, because the chart I was pointing to, which basically said, hey, look, Bitcoin is at, it's not, yeah, I think internet is down again. Come on, you silly bugger. So people might remember this chart I was pointing to. Come on. Okay. Yeah, there you go. There's trusting in technology. That's put our faith in technology. So here's the thing. Yeah, it's stuck, but I'll just show you what I'm looking at anyway. The chart I was looking at before is basically these sort of long-term charts of where Bitcoin was. And if you look at this trend line, when the screen refreshes, it's been supporting Bitcoin right up to now. And that would tell us, if we believe this trend line, that is a key support for Bitcoin. And it is around just underneath 20K and a wick below, and it's going to bounce up and all that. And you see a lot of these long-term charts like this. And what I was saying to people is that chart started in something like 2013. And basically, in 2013, the environment for, since then, for the last 9 years, when in fact, in the entire history of Bitcoin, the environment is basically just one of federal accommodation, of Federal Reserve easing. So let me turn the camera around. What I'm saying is this. Every chart you look at, historical chart of Bitcoin, says Bitcoin is in huge discount right now by historical standards. This has only happened like 3 times in Bitcoin's history. It's come down to this band and it's super cheap to buy. I agree. If Bitcoin was at 69,000 right now, and I would pray that Bitcoin ever get down to the lower support line on whether you draw it as a straight line, as a support line, or you can draw the LGC, what they call the LGC, logarithmic growth chart support line. There are so many lines. There are so many metrics. You look at the what they call the RVNV metric. There are so many metrics you can use to measure Bitcoin, and you can say that it is really cheap right now. However, what I would say is all those metrics, all those trend lines are from the last 13 years in which United States has gone on unprecedented monetary support. Put it simply, printing money and zero interest rates. 9 out of those 12 years, United States had zero interest rates. And for 1 year, it had something like interest rates above 1% out of those 12, 13 years. For one of those years, it had a QT, quantitative tightening. What we're in now is quantitative tightening at twice the amount as last time and 3 times faster, because it took them like a year to go to ramp up QT to $50 billion a year. And even Trump's Twitter said, please stop with the 50 Bs, right? Now, the thing is, now they're going to 100 billion, and they're going to do it by September, if I'm not mistaken, like 3 to 4 months, they'll ramp up to 100 billion. So it's a lot faster, a lot harder. like J06. Like I said, it's going to be rough. You're going to get it, but it's going to be rough. Also, the rate hikes are so much faster. Last time it took them like 2 to 3 years, starting from 2016, 2015 to 2018, to get their interest rates up to like 1 point something percent, close to 2%. Now they're going to do that in 3-4 months. That's why I kept on saying this time is different. People said every time when they raise high interest rates, markets actually go up, markets actually rebound. That's why people were saying there's going to be a melt up, there's going to be a melt up. I was like, I cannot discount that 100%, but I literally sat on a beach somewhere, maybe not this one, but a different beach somewhere, and made one of those earlier videos from 2-3 months ago when I first started doing these longer videos on YouTube, and I said, that's likely not to happen this time. Look at the facts. Before, stock markets and crypto goes up as interest rates are rising, because they would say, have a meeting and say, oh, should we do 25? Okay, let's do 25. And then for the next 3-4 meetings, they do nothing. They wait and then say, oh, we'll go up another 25. And it takes them 2.5-3 years just to hike rates 1%. Now they do 75 basis points in 1 month, and next month they might do another 75 basis points. They say 50 right now, but it could be another 75 depending on what the inflation number is coming out on the 10th or 11th of July. If it's going to be a terrible number in 3 weeks' time, then yep, 75 basis points. I wouldn't even rule out 100 basis points if we get a terrible number, provided we get a terrible number. So what I'm saying is, to use a statistical term, the regime that Bitcoin has existed in has now changed. To use layman's terms, essentially, all the charts, all the metrics we're looking at, that shows whether Bitcoin is cheap or not, or at support or not, or were all done during 12 years of massive United States Federal Reserve money printing. Now, for the first time, I would say, since 1979, we've had the hardest tightening, Federal Reserve tightening cycle, and it's likely to continue. So therefore, I think all the old charts may not work. If it was for my own private investment, I would just say it's not going to work. I'm 70% sure of that. But since I could be wrong, and some people are going to cry if they miss out on 17K Bitcoin, I would say, don't listen to me. I can't be 100% sure. If you love Bitcoin that much, dollar cost average in. But I keep on stressing it's not that special anymore. People say things like, it's never done 4 weeks of weekly red bars. Now it's done 9 in a row. It's actually, in fact, done 12 in a row, except 1 week where it just did a little bit of green. People say it's never gone back to its old previous high before. Now it's done that, and done so by a huge margin. And people would look at those charts, including me, and say, that is hugely cheap. It's coming back to like a 9-year support line. Every time it touches that line, it's cheap. It's bottom of the market. Could be true. But I just keep on reminding myself, we're not even, people compare this rate hike cycle, this tightening cycle, to 1994, where they go, oh, they did a 75 basis points tightening in rate hike in 1994. I would say, no, man, we're not even in 1994. We're in 1979. Because in 1994, they didn't have stagflation. What happened was you basically had inflation, and they hiked rates and inflation really fast. That was Greenspan in 94, and they hiked 75 basis points. It's the last time they did it. It was like 28 years ago, and basically markets tanked and stocks and the economy tanked, and then they just basically stopped, and they turned around really quickly, because what happened is economy tanks, stocks tanks, then you have to come in and save the economy, save jobs. This time is different, because this time, not only are they hiking by 75 basis points, they're also doing QT, quantitative tightening, by $100 billion a month, which hasn't been done before, from my knowledge. And they're about to ramp up to that. They're already doing what is like $25 billion a month right now. They're going to ramp it up step by step to $100 billion by September, from memory. So that's already very different from 1994. And number 3, we have now stagflation. We didn't have stagflation in 1994. So what could happen I'm not saying this will definitely happen. I'm saying what I said to my Discord was this, and it's going to sound laughable, because people are like, oh, it didn't go down to 20K. Well, those idiots are paying for it now, right? So I'll put my opinion out there. I think in the next 2 years, more likely to be specific, in 6 to 18 months, which is end of 2022, end of 2022 to end of 2023, I think the United States is going to go into stagflation of some sort. People who know more about the economy than I do, the bond king, Jeffrey Gundlach, has said he expects inflation to come down, but to high sixes, like 6.8, 6.9. Let's say if even he's been pessimistic. Let's say if it comes down to 5%, right? That's really like from 8.6% down to 5%. That's still way too high for the Federal Reserve. Unless unemployment goes above 4.5%, the Fed will still be tightening, will still be keeping a tightening stance. The U.S. economy, I think we'll see in the next 3 to 6 months, the manufacturing, the services sector, the consumer confidence are headed straight down. In that scenario, you're going to have two things that's going to kill Bitcoin. One, the rates are going to be really high. We could see interest rates at, say, 2.5, 3% and they keep it there, for another 6 months. We could see QT of $100 billion a month, and they could keep it there for like 6 months. And inflation still wouldn't come down. According to Jeffrey Gundlach, it would be like 6.9, and he knows more than I do. He's the bond king. He's a billionaire. Let's say if he's wrong. Let's say if it goes to 5%, even 4%. That's still way above where the Fed's target is, which is 2.5 to 2%. In that scenario, where would stocks, especially the Nasdaq and Bitcoin, be? A lot lower. And people say, okay, maybe that's been priced in already. Okay, I'll give you that. Maybe that's been priced in already. But have you priced in the fact that the U.S. would be in severe recession by then? Because if you keep that kind of QT and high interest rates up for that long, then corporate profits like SP 500, their earnings would be down like 20%, 30% from now. Like you would have earnings guidance is saying we're not going to make that earnings growth. In fact, we're going to be down 10% on almost 90% of the companies across SP 500. Stocks are going to tank more, and then is the time to come in and cut rates back down to zero really quickly and stop QT and QE. And yet the Federal Reserve cannot do that because inflation is still going to be like 6.9, 5.9, 4.9%, and that's still way too high. Now, here's the thing. I'll say this, so I hope I record this sentence for the record. I think in the next 6 to 18 months, or end of 2022 to end of 2023, we have 10% chance the U.S. is going to achieve soft landing, or it's going to be fine economically. But a 50% chance U.S. goes into recession, and with inflation, I mean stagflation. And also a 40% chance the United States goes into mild depression. I wouldn't call it the Great Depression. Some people call it Great Depression. I would call it mild depression, because I do believe that as soon as you have shit hits the fan, as soon as you have basically unemployment above 4.5%, Federal Reserve comes out and says, we have to choose between bad inflation and bad unemployment. Oh, well, you always choose jobs. Like, you always choose jobs in that scenario, and they're going to cut rates back to close to zero and stop QT and start quantitative easing, printing money to like $3-5 trillion in a year, to an amount we have never seen before. I just like to put that message out there. That's my thinking for the next 6 to 18 months, which is end of 2022 to end of 2023. I think something like that's going to happen. It sounds kind of crazy. No one on Wall Street is saying that, but that's my thinking, for the record.
Yeah, I mean, it already has been shown that this cycle is different in just about every way possible, right? We already know that this crypto Bitcoin cycle has been different. And now that we know that, you guys can take that information and make more educated decisions with that, because we don't have the same predictability that we used to have. And that might look different depending on your scenario and diversification and everything. But don't you think that the Fed meeting was more hawkish? He was more hawkish than I expected. I mean, there was a few reporters that were. I mean, I guess given the rising inflation, rising CPI numbers, my expectations were a little bit more hawkish. But he basically said, what good is jobs if your wages can't buy the goods and survival that you need? I actually recorded that line. I was going to make a video about it, but one of the reporters stood up and said, but what about jobs? What about jobs? And he literally said, well, you know, what good is your job and if your money can't buy anything? And I was like, whoa, that is an aggressive statement. This guy is serious about inflation. And you know what, guys? A lot of Bitcoiners, a lot of you crypto guys listening, we don't like the government. We don't trust the government. We don't trust fiat, whatever. All that stuff is fine. But you better believe that the Fed understands the danger of inflation at the rate that it's at now. They know this is serious. And this isn't just political games and posturing. This is like the kind of serious that can ruin a country. This is like the kind of serious where when they're in their back rooms talking about it, they're not smiling. They're like, oh shit, did you guys see this inflation? This is like really serious. So this is not fun and games anymore. This is hardcore stuff we're dealing with. Pablo's been telling us that it's hardcore forever. Back in the bull run, Pablo was the only one saying, you guys, wait, let's see what the Fed does. Let's see what the Fed does. And all the other influencers were laughing. They were like high on hopium, like, Bitcoin is so beautiful. It's going to rescue us. Pablo's like, no, it's not. Wait till you see what the Fed does. But this is serious stuff right now. Everybody really needs to understand how serious this really is. An inflation level at this level is destructive. And they are going to be aggressive. They're going to be hawkish. They're going to continue to do that. And it's, Pablo used the word mild depression. It's possible because it can create a death spiral in stocks with decreasing earnings. And it's that can happen. It can be a crash, not just a correction.
Okay, thank you for that, Bryan. And I would like to say that Bryan was also one of the sensible ones who actually said take profits and basically Bitcoin. We're actually really bullish on Bitcoin. But we live in the real world. We're just not saying it's going to go to 300K this year. We think it'll definitely go to 300K in a few years, maybe 10 years. Not financial advice, but it's become so extreme that people can't even accept bullish guys like us anymore on Bitcoin, and they have to. Yeah, if you don't say Bitcoin's going above 100K, then you're a Luddite, or you're a bear or whatever. And anyways, the Bryan made a number of good points there, and what I'm trying to say is, I thought the Fed wasn't actually as hawkish as what I thought. Now, here's the thing: the market has actually priced in something like, for the next 3 meetings, before he announced 75, the market priced in 75, 75, and 50, maybe 75, 3 in a row. And yet he came in and said 75, but it's one off. Next one, possibly, most likely 50 again. That's essentially what he said. And I was like, what? And the futures market for the Fed funds rate instantly came back to 50. The market, those bills just went straight up. And so which means rates came down from 75 to 50. The market was wrong-footed on that. He wasn't as hawkish. Now, but the thing is this. When he said, Bryan, I don't think we should freak out when he says stuff like, which you thought was hawkish, when he says stuff like, oh, what's the good point of having jobs if people can't buy the necessities with the money wages they make from those jobs? Bryan, he could afford to say shit like that. He could afford to say that because right now the job unemployment rate in the United States, the way they measure it, the unemployment rate is at 3.6%, which is the lowest in American history. So therefore he could say, oh yeah, jobs be damned. I don't care about jobs. I care about inflation. Of course he can say that when jobs at lowest level in recorded history. Of course, the way they measure it is dodgy, but that's a different conversation. However, let's hear him say that when jobs get to 4.5% unemployment, because right now every week I bet Biden's calling up Yellen saying, Yellen, get your boy, at the Fed in line, and she's like, what are you most concerned about? Inflation, inflation, inflation. What about unemployment? Who cares about unemployment? We're at 3.6%. I'm going on Kimmel next week, and I'm saying we have the lowest, Biden could say, we have the lowest unemployment rate in history under the Biden administration, right? Not the Trump administration, not the Bush administration, the Biden administration. He could still claim that for the next 3-4 months, right up to November, the midterm elections. They don't care about unemployment right now because the way they measure it is the lowest ever. That's why the Fed can be cheeky and say, jobs be damned. What about jobs? People need to be able to buy the, the necessities to live, to survive with the wages they have. Inflation's everything. Yeah, that's hear them say that at 4.5%. I'm a bit rough on this, so I need to go back and look at real figures. But my guess right now, without looking at specific numbers, is I think they're going to start acting around 4.2 to 4.3, 4.5, that band. When unemployment gets that sort of area from where it is now, 3.6, and inflation still high-ish, like say 5 to 6%, I think then they'll say, damn, jobs mean everything. Inflation. If we have to choose between inflation and unemployment, we choose jobs. We're gonna bring rates back to close to zero, below 1%, whatever it is. At least stop QT. Maybe not QE, maybe not print money yet, but stop QT. And then if we get like a severe recession or mild depression scenario, boom, they're gonna go in and do that whole money printing, rates of interest rate at zero business again, and stimulate the heck out of the economy.
Yeah, it's funny because the whole crypto market and stock market right now is propped up on leverage because money was so cheap. And in that sense, I really could see a crash coming and even more downside because not only is that liquidity drying up and all of these venture capital firms and, MicroStrategy and these backers, everybody who's funding this whole thing, interest rates are higher now and they're going to keep going up. So money's going to be more expensive. But we're already seeing the loss of confidence in the crypto markets with Luna, with Celsius, with people worried about MicroStrategy. So it's a double whammy. Not only are interest rates going up and money's becoming more expensive, but the leverage that we had, even at low rates, also is collapsing. And when rates were low, the crypto markets did not build something sustainable. I would have been really impressed if Celsius would have come out and said, if you guys don't know, if you guys are just tuning in, probably most of you guys already know, but Celsius is a DeFi lending platform in crypto that froze all of their customers' deposits. And Celsius was painting itself as a very safe place to come. Put your crypto in here in the bear market, you'll get passive income, it'll be great. You could be on the beach like Pablo, because we all want to be on the beach like Pablo. But Celsius froze everybody's deposits. So they didn't even build anything sustainable while rates were low. That's beautiful, man. Look at that sand. Look at that. That's so pretty. How are they going to build something sustainable when rates are higher if they couldn't build something sustainable when rates were lower, right? It's crazy. It really is.
Yeah, so you can see this happens every time. I just didn't expect. I was expecting MicroStrategy to break down. I was expecting TRX to break down. I wasn't expecting 3AC, but that guy is a degen. He's got Chinese blood in him. He's basically a gambler. He's got the good old Chinese gambling genes in him. It's in their cultural DNA. So essentially, like in good times, if you get in trouble like this, you just go to some guy and you go, "Hey, come on, lend me some money. We'll get out of this because markets will rebound. Bitcoin will always go higher, or at least do a big rebound to like, somewhere reasonable, and he could cash out. Those loans could work for him, but now nobody's giving out loans because interest rates are higher, and junk bond yields are a lot higher, and that's why AMC is crashing. That's why GameStop is crashing. It's a different regime now, guys. It's a different environment from the last 12, 13 years. That's my main message, and people are still like okay, I guess I guess I'm a lot more pessimistic. I'm now a lot more pessimistic than I was before. I could be wrong. So it's always risky when I say stuff like this and it doesn't come true. But I wish, other times when it does come true, I wish I was like, warn people more, because so many of my followers have lost so much in the last week or so. I don't want to make those videos where I laugh at people, but so many dickheads out there also was asking me to win 20k bitcoins all the time, and I had to say to them, that was my message saying, well, now you got it, bro. Now you got it. Anyways, okay. That aside, I do feel for my other followers who have lost, and they're following me, watching me, laughing my ass off, doing Les Miserables, when the market is tanking. I wish I warned people more. Right now, I'll say it again. So, at the risk of being humiliated online because Pablo is calling for a mild depression, I will say that look, guys, this time we are very likely to get some sort of repeat, a mild repeat of what happened in the 1970s, when Volcker jacked rates, the U.S. federal funds rate to 20%. I don't think it'll be anywhere near that much. Like 3-4% would kill the economy straight away. But however, in a stagflationary economy, back then, if you look at the 70s, I might pull the chart. Oh God, I don't know if this is going to work or not. Let me see if it's going to work for me or not. Okay. Okay, I have internet. Okay. This is the stock market, and the reason why I'm looking at stock market is because I think we've all realized that the crypto market is highly correlated sometimes to the stock market. So I ask you, if the stock market tanks, right? Where do you think Bitcoin's going to be? So this is the 1970s when inflation. Okay, where's Fed funds rate? I can probably even put Fed funds rate up here so we can have a look. Let's see, Fed funds. Fed funds rate. Actually, I'm going to put it up on a different scale so we can see. Give me 1 second. Now, this is the tricky thing because neither of us, Bryan, actually lived through that period, and neither of us were obviously trading during that period. So it's and I'm going to put up the CPI. See if I can put the CPI. Inflation, U.S. inflation.
Yeah, we weren't trading, and we were kids or whatever, weren't born yet, and that's why people don't believe that this can happen again. But it can happen again, and whether it's as extreme or a little bit more mild, everything is setting up to be